I've recently discovered a US30 trading strategy that will grow small accounts very quickly. But in order for you guys to understand any of this information, we're going to go through a step-by-step process. And if you don't know who I am, my name is Colt. I've been trading for 9 years now. I went from being an alcoholic at 17 years old, about to end up in jail when I was 18 years old, to now making multiple six figures trading forex, and I'm here to help you guys out. If you guys do want to work one-on-one with me and join my mentorship, click the link in the description and you guys can book a call with me. Now without further ado, let's get in my computer and let's make some money. Welcome to my computer, guys. I'm going to give you guys a couple of indicators that we are going to use throughout this strategy. The first indicator that I want you guys to get is type in Lux Algo and then add Lux Algo fair value gap right here. Next one that you guys want to get is the sessions indicator. You're going to get this one that says sessions Asia, London, New York colored. And once you add that, these indicators will appear on your chart. So these little red boxes right here, these are fair value gaps. And I've been using these fair value gaps to find really precise entries, but I also use specific reversal candles within a higher low or a lower high to give me very nice entries as well. And we have this shaded area right here. This is our sessions indicator. So if you go to the settings, I don't have the Asia or the London clicked. I only have the New York, and I have it in this gray color with the opacity at 10%. I have the opacity really low just so it doesn't like go over the candles and block my view of the candles. So that's how I have them. Those are the two indicators that we are mainly going to be focused on as we're going through this strategy. The next thing that I want you guys to do is on your watch list, make sure you add US30, but add US30 Wanda right here. So this is the one that I'm going to be looking at right here. And the main time frames that I'm going to be focused on are the minute 15, the minute 5, and the minute 1. So if you guys go to the time frames, you can put a star right here so they're easily accessible as you're going through your charts instead of having to go like this, then find it, and like this. So it's very accessible when you favorite them so you can go through them a lot quicker and easier. So what is the setup that we are currently looking for? I'm going to give you guys the sauce. Usually what we want to see is price kind of make like a low. And then we want to see price push up to make a higher high. Want to see price make a higher high. Then we want to see price make a higher low. So let me get this tool again. Want to see make a higher low. And within that higher low, we want to see some type of reversal candle form. We want to see a rejection off our Fibonacci's, or what I like to see most, and that's why we got this indicator, is a Lux Algo, is a fair value gap. Then we want to see price move away from that fair value gap reversal candle. And usually if you see, first off, you want to see a fair value gap. Once price hits that fair value gap, and we're going to go over the charts, guys, just be patient, bear with me. I'm going to tell you everything that we need to do. Once we see price hit that fair value gap, if we see a reversal candle or something close within it as well, that's going to give us extra confirmation. So that's mainly what I'm looking at for an uptrend. We're looking for a downtrend. I want to see price make a high. Then I want to see price make a lower low. Then I want to see a lower high. Within that lower high, I want to see what I just mentioned. Rejection of Fibonacci's, our key levels, reversal candle. Mainly what we're looking for though is a fair value gap, and then we want to see price move lower. So what does this look like as we are looking at the charts? Let me go and remove these, and we're going to go and find it. Now, I was just talking to one of my students a second ago, and we have both noticed that the markets have been extremely choppy and volatile on indices for the past like month and a half, 2 months. And I have been kind of like taking these losses and really trying to figure out why is the market doing this. It's just we are in different times. Back in 2018 and 19, I would be trading all throughout the day and I would see a reversal candle. I'd take a trade and my setup would form perfectly. Now the technicals in these textbook setups aren't playing out as they usually would. So you guys just have to be patient and understand that we're going to have these cycles within the markets where there's good months and then there's bad months, and you just got to stay strong. So one thing that I do in order when I say stay strong is when you tend to see the markets kind of being out of whack and things that you're not used to, simply risk less. If you usually risk 3% per trade, start risking 1%. And that's ideally the best thing that you guys can do. If you're on a losing streak, cut back your risk. That's the best thing that you guys can do. So we can kind of see price is moving lower right here. And what I really like to see when I'm trading is I want to see the market be in one steady trend with a bunch of small candles. I want the bodies of the candles to be very small. I do not want very erratic price action like this. This is what I qualify as just choppy, volatile markets, and you're going to get stopped out a lot. It's going to be very frustrating. You don't want to be trading in the markets like this. You want to be trading when we see a very clear downtrend like this and the market is forming these very small candles. Now the times that we're obviously looking at are going to be the market open. So it didn't form there, but we can see that the market actually did give us a setup right here. So we have all these fair value gaps. I'm going to hide my tool just for a second. So I just hid my fair value gap indicator, and what I'm looking for is this fair value gap right here. So we have this big bullish candle. We're going to go from the previous candle's low, and this is a 3 candle setup right now. First candle is right here. Second candle is right here. Third candle is right here. So with these fair value gaps, these bearish fair value gaps, we're looking for a kind of decently sized candle to make a gap between the first and the third candle. And that's where we're getting this rectangle, this box that we can mark up. So with the bearish fair value gap, we're going to get the rectangle. We're going to go from the low of the first candle, and then we're going to go to the high of the third candle right here, get that box, extend into the future. And ideally what we're looking for is we want to see price form this lower low like it does, breaks this previous lower low right here. This is overall lower high. Then we have this new lower low right here. So as price is breaking previous lows and making a new lower low, I want to see the candles create a fair value gap, and that's exactly what it does within this 3 candlestick pattern right here. We have our fair value gap form, and look at how perfect this is. If we turn our indicator back on, there's our fair value gap right here. So I'm going to just turn it off because there's all these fair value gaps right here and it's kind of like overwhelming to see. So this is what we're focused on. Right here you can see on the bottom of my screen, look at right here, this fair value gap. After this candle closes at 9:25, it is the market open. So ideally, this is what we would have been seeing in real time. So with these fair value gaps, there are 3 ways to enter on it. And I'm going to explain it to you guys right now. Usually the first way that I enter on a fair value gap is price is currently right here when the fair value gap formed. Once price goes and hits this point, the bottom of the rectangle on a bearish fair value gap, I'm going to be selling. But you can also do it to where it hits the halfway point and the top of the fair value gap. I think the most accurate ways to measure the fair value gaps and figure out where you should sell is if you get the fibs from the high or the fair value gaps. It doesn't matter the high or low what you do. And what we're overall doing is we're looking for that 50% level. So we see our 50% level right here. And you kind of do want to be precise. So this right here is how we could enter this fair value gap. Let me zoom in real quick. So we can go for a short, hypothetically. We could go for a short right here with our position. Or we could drag it up here and we could go short there. And what you guys could do is you could realistically enter 2 different positions. So now, let's say that we're entering the fair value gap right at the bottom right there. I like that. Our stops are usually going to be above the third candle or the first candle of the fair value gap. So this right here, remember, this is the first candle, then the middle candle that creates a gap, and then we have the third candle. So with our fair value gap, the third candle or the first candle, that's usually where I have my stops at to be safe. And then what are we going to do for our take profit? Simple. Look for previous support for a sell. Let me get the cursor or the cross so it can go back in time. So we have this low right here. But look at the risk reward ratio. That's no bueno. So I want to find a lower point. So we have this support down here, or we have this resistance right here. We can kind of look for. So maybe we could go right and on this wick, this previous resistance, and we want it to turn support. So ideally, this is how we have our trade set up. This is what I'm looking for. I want to see price make these clear lower lows, lower highs, expect price to make a new lower low. Within that lower low, I want to see it make a lower high with the fair value gap and then move lower. So ideally, that's what I'm looking for in this setup. So let's go and play it back. price hits our fair value gap, it hits the halfway point. And what you want to see that is very, very important, let me delete this to show you guys really quickly. This is very important. To make a fair value gap valid, you do not want, I'm trying to go back and forth so I can show you guys a representation. You do not want the bodies of the candles to be closing outside of the fair value gap. If it's closing right at the top of the fair value gap, like it almost did right there, that is fine. If the candles, if current market price is going outside of it, but the body of the candle is not closing outside of it, that is perfectly fine. So right there, we see our very valid fair value gap. Let me go back to, we'll leave it on the cross or the dot. So this is still a valid fair value gap. And the thing that I love about these fair value gaps is like you want to see a very quick reaction away from them. Now let's play back. There's our very quick reaction. So we can now see that price on this candle, look at where it closed. The body of the candle now closed below our previous lower low. Price is now looking to make new lower lows, which is a good sign. One thing that I do too, you guys should be taking notes of this information I'm giving you because I'm dropping bombs on your head. I usually get the fibs from my entry and then I'll go to my take profit. Once price goes to my halfway point, the 50% level, I'm then taking off 50% of my position. So when price goes here, I have an alert set and I'll go and take off 50% of my position and then I will trail my stops to my entry. So now this trade is break even. Let's see if price continues to go to the downside without hitting our stop loss. There we go. TP hit on this candle. So ideally that is the perfect setup that I am looking for. And I have been preaching this a lot because the setup is just so crystal clear. When it appears, you take it, and it appears mainly on, the thing is, when you're on higher time frames, there's going to be less and less fair value gap. But I feel like between the 15-minute, 5-minute, and 1-minute, the 5-minute still offers a good amount of fair value gaps, but it's not too many fair value gaps, because if we go to the 1-minute, check this out. If we're on the 1-minute right here, I turn the fair value gap on, look. Oh my gosh, look at, there's like 20 right here. So it's hard to kind of figure out which fair value gap you want to use. And here's a thing that you guys should be taking into consideration too. I want to be looking for these bigger fair value gaps. Like this size, these little skinny ones like this one right here, no. One right here, no. The ones up here, no. I want like these thick fair value gaps. I feel like price retrades back to them a lot better. Like right here, lower low, lower high, selling here, boom. So it's very important that you guys take note of these little things. The next thing that you guys could do at this point in time, if you're really serious about your education, is not go watch the video that YouTube is suggesting you to the right side, but instead go and watch this video again, pause it at these key points that I'm telling you, and then go to your chart on US30 and see if you see any of these similarities, because I think that's what personally gives me a lot of motivation and I get like a little breakthrough and boost of energy is when I learn something from someone, one of my mentors, and I go to the chart and apply it, and if I see if it's applicable, then I'm like, okay, perfect, this makes sense, let me go and back test this now. So you guys want to get data, just test this out. Don't do this for a couple of days and then say, oh, Colt's wrong, it doesn't work. It will play out multiple times throughout the week, especially if you're on lower time frames, but you guys need to get data and test it. That's like the most important thing that all traders should be focused on throughout their trading journey, is just getting data on the markets, one, but also data on oneself. You guys want to see how your emotional control is when you're trading. There's so many factors that go into trading. So I will see you guys on the next video. Peace out. Have a good night.